So it was a choppy session on Friday with the Sensex and the Nifty ending 1%, in fact losing 1% this week. So all over the place you'd have to say, but this is Editor's Roundtable where we are going to talk about all the big cues that we've seen this week and get to all the big cues to watch out for. Hello and welcome to the show. I'm Sonia, Shenoy, and with me are the editors. We have Prashant, Nigel. Anuj is missing today, but Nimesh is here with us. And you know, folks, it's been a rather interesting week, right? I mean, we had a very challenging global environment. Amidst that, the Nifty was quite resilient, and now the month of August has come to an end. The series of August has come to an end. A 2.5% rally for the Nifty, a 5.5% rally for the mid-cap index. So all in all, you'd have to say, not a bad month at all.
Not a bad month at all. Although, I mean, last 2 days, Nigel, we were on closing bell. Things are getting a little slippery, right?
A little choppy.
Slippery, slow.
Yeah.
2 minutes on Friday, I mean today, in 2 minutes, the Nifty sold off 80 points. It almost was reminiscent of what happened on Thursday, but Thursday was expiry, so it's getting a little tricky out there.
Yeah, getting to a big event, right? You need to hear what the Fed has to say. So I think a little bit of choppiness, par for the course, I'm guessing. You know, we've protected that 17,350 odd mark. So I think we're in a bit of a range, maybe.
You know, the easiest way to sum up what happened in the last two series, so to speak, it looks like Indian markets are just climbing the wall of worry. So much of global data which is negative or not very strong. Despite that, you know, the two series back to back, we are in the green, and there is a bit of left out feeling as well. You know, I've been saying this for the last few times that the retail investors now just seems to be picking up. Now they're back in the action. Look at the kind of action which is there in the cash market. This whole week, it was not about the Nifty and the Sensex, but a lot of cash stocks. You know, broader markets have really outperformed, and there's so much of action from the retail and HN investors. You know, that's the market now. You know, we're just climbing the wall of worry, and the retail HNR participation seems to be back, and that's what is showing up in the cash market stocks.
In fact, Nimesh, we missed you. You were not there the last two shows, so you're back. You were talking about the left out feeling, and you were left out of the show, right?
Exactly.
Happy to have you back.
You know, in fact, Nimesh, a couple of Fridays ago when we were doing this show, before we started the show, now he said, Nigel, all these people are saying there's going to be a correction and all. Nothing like that is going to happen. I'm telling you, there's so much of money waiting at the sidelines. I think that we were 16,500 just before the show started. He said, this talk of correction, there's too many people, they are waiting by when to get in, and we were at 16,500, I think 16,600 odd marks. So, you know,
but again, just to now, you know, after the big two good series, now I think there is a lot of confidence back. Everybody wants to be part of it. Everybody wants to jump into it. The way the cash stocks are buzzing in trade, looks like now now there is a bit of time to be cautious now, you know, and you can read the macro reports, the strategy notes of all the brokerages. Everybody is now sounding a bit cautious. India has relatively outperformed, and we are very expensive. So I think that is something one needs to take into account, the fact that we've rallied pretty hard in the last two series, and the macros are not yet, global macros are not yet settled down. You know, there are some challenges in the global front.
All right, maybe, so will this then, that's the context, will this then turn out to be a point which becomes very important? You know, what I want to do is I want to start with putting out that graphic, which is nothing but a trend line, an important trend line. The first time we put this up was on the 12th of August. This is exactly 2 weeks ago. This is a trend line which starts from the all-time high of 18,604, which we made in October of 2021, and has got more than a couple of touch points all the way down. We've basically, after that, once we put that out, and it's on your screen now, the Nifty crossed that, and then it's kind of seen an exhaustion move below it. We are now firmly under that trend line. Once again, the last two times the market kind of knocked on this trend line, it saw pretty large down moves. So are we at that point once again? I mean, I'm calling it trick or treat. You can call it trap or treat. Will the market trap bulls, or will they give them a treat by kind of breaking this out firmly and finally in terms of a big push higher to all-time highs? So that's, I think, a big technical indicator to watch. Just a couple of points, other points to run through. People are watching what Fed Chair Powell will say later, and I think that is important. But I think, you know, think about it, a central banker sitting amidst other peers, his peers, central banks. I mean, he's got to sound credible that we will do what it takes to bring inflation down. The market knows this, so it's not as if it's not, it's something which is very unexpected. So could it turn out to be that we see a whimper of a move, nothing very large? Monday, it's possible, but we don't have to wait very long to find out. The texture of the market is that rallies are being sold, dips are being bought. So neither sort of, bulls or bears, they want to give too much space. And I think, as I mentioned, we were seeing this repeatedly. We saw this on Thursday. We saw this on Friday as well, when the market sold off and came right back to where it started from. One of the reasons why I think this skittishness is what Nimesh also mentioned, that markets have done very well. India, over the last 10 quarters, as measured by the MSCI indices, has outperformed emerging markets. 10 quarters now. That's quite something. Based on FY24 earnings, that's at about 950 rupees for FY24. Nifty is now trading at about 19 times earnings. It's not very cheap. It's not expensive. It's not blowout expensive, but it's not cheap either. And I think some of this is playing out. Just one data point, after being long in the futures and options segment, FIs have finally turned short. So now they are short by some 31,000 contracts. Just to put this in perspective, when market was at 15,200, they were short some 1.5 lakh contracts. You can make the argument that shorts in the system provide comfort, but the point also is that it's also possible that they're just building this and it'll go higher before it starts to bottom out. Action, the feedback one gets is more stock specific. Capital goods, manufacturing are themes, financials are doing very well, and will put a spotlight on banks. And something in terms of food for thought, more and more chatter that Indian government bonds perhaps are on their way for inclusion in global emerging market, bond indices, which can bring billions and billions of dollars. It may not happen immediately, but the market chatter is picking up, and I think the bond market is paying attention to it as well. Sonia.
You know, you were pointing out the capital goods space, right? So I just want to highlight a couple of pockets that did really well this month. Autos, of course, has topped the charts this month since we've ended the series. So you have, M&M, Aisha, all up 10%. And capital goods, right? All of these stocks, Siemens, ABB, Thermax, some of the smaller capital guys, all are hitting 52-week highs. And there is a pickup in perhaps infrastructure capex as well. That's what a lot of the corporates are indicating to us. So these were a couple of spaces that did well. Now, the big question is, as you said, the dips are getting bought, but the rallies are getting sold into as well. So what's going to be the trend this week? Nimesh, what are the dealing rooms suggesting? This buy on dip situation is something that's worked through the course of August. Right. Will that continue?
Well, Sonia, before I talk about whether this will continue, why I said Indian markets are climbing the wall of worry. Look at the Indian equities in the since the end of June. Indian markets are up 13% in dollar terms. It's been the best performing market globally, and we have outperformed the global indices by 6%. As Prashant pointed out, valuation-wise, we are not cheap, nor we are very expensive, but we are not cheap as well at 19 times forward earnings. And there is a bit of risk on the earnings as well going forward. So that is something one needs to take into account. From a technical point of view, I guess we are in this range between 17,200 and 17,800. The overall feedback is any big move has to happen either on the downside below 17,200 or on the upside above 17,800. If 17,800 is taken out, mark my word, we'll fastly move to 18,500 even before people think about it as to what's happened to the market. So, that's the kind of trend which is there in the market right now. Even in terms of flows, I've been saying this for the last 2-3 episodes that the FI money seems to be back. But the other thing is there is a lot of selling as well from the FPIs. For the last 2-3 weeks, we are constantly seeing a lot of large blocks where the strategic investors are selling out, and that's bailed out by some bit of FIs and a bit of domestic money as well. Even this week, look at the big headlines. Singtel selling 3.3%, wherein the Bharti promoters are looking to buy out. Today, there was a large block, one of the private equity sold out completely out of the recent listing Rolex ring. So there is a lot of that kind of flow or supply of paper which is there in the market, and that's going to only continue is what my sense is. So flows are going to be important, but even from a technical point of view, for any large breakout on the upside, watch out for 17,800 because that's a bit of a strong resistance is what the technical analysts are talking about.
Okay, and Nigel, the banks I think were, they turned performers this week from being underperformers for a majority of the last year. So that was the big takeaway.
Well, guys, but it's that part of the month where banks are very important. Why?
I don't know.
Salaries.
All right, but that's not that. I mean, we're
Both of you
it out.
think alike, huh?
Or maybe Sonia, you're not spending this salary. Anyways, let's focus on the banking names then. Banks, they were in focus this week, and it was with a bit of a change this time around because the larger banks Well, they didn't really participate. In fact, the larger banks were relative underperformers in comparison to some of those mid-sized companies, or the tier 2 banks, so to call it. RBL Bank, you had Central Bank, and all of them, they did very, very well. You had DCB as well as Indian Bank. And there's been a while since I saw that some of these tier 2 banks, they did much better than the tier 1 banks. So there's a consensus bullishness on the banking space on the whole. Not about these mid-sized banks, but the banking theme. Why is that? That's because, in fact, it's a pure play on the domestic economy. Yes, globally, there are some risks, but maybe the banking names, well, they have a low risk in comparison to, the other names with regard to global uncertainty. Then we're talking about the Fed hiking rates. That could have its repercussions, and maybe the RBI as well hikes rates. Now, banks, they tend to do better in the near term when interest rates go up because the NIMs improve as well. The worst of asset quality is likely to be behind us. That's what the street believes. And the best in terms of credit growth, that's ahead of us. And if the FIs are going to be back, remember, they sold those banks big time. So if they're going to be reloading, then maybe these banking names as well standing the chance. But that's, on the whole, why there's a consensus buy on all the banking names. Let's focus on the banking credit growth. We just got that report a couple of days back. And in fact, in the quarter of June, the credit growth was nearly around 14%, which is phenomenal. I went to the RBI site. I saw the 19 quarters earlier, we never saw 14% credit growth. You could say it's on a lower base. But then let's take the seasonality factor. I looked at the June quarter, even prior to COVID. And even if you compare it with that, well, we were doing around 11.5% or thereabouts. So this 14% clearly is good. And the cherry on the cake is that, if you're looking at the credit growth, that's outpacing the deposit growth. For example, we saw 14.5% credit growth, while the deposit growth was around 9.5%. The credit deposit ratio, that's moved to around 73%, which is the best we have seen since the pre-COVID quarter. That's March 2020 odd. So things looking good on that front. When you have that, credit deposit ratio moving up, that's a sign that the economy is on the mend. Now, how do valuations stack up? The larger banks, well, they always commanded higher premiums, in terms of price to book. And they're trading at a sharp premium in comparison to the smaller names. But let's compare these smaller names with what they have traded on a 5-year average. And some of them, they had called for higher valuations earlier as well. On a 5-year basis, if you're looking at an IndusInd Bank, if you're looking at a DCB Bank, RBL Bank in the past, on a price to book, well, they have got higher multiples. Finally, before we wind down, what do you track from here on? Will there be some consolidation? That's a question mark. We hear some buzz. No confirmation out there. Banks with higher CASA ratio, they'll stand the test of time because they have access to lower cost of borrowing. And also keep in mind that everything's looking good, but there's a risk of some of the restructuring book which could slip. And finally, if there are more IPO as well, that could create some bit of a buzz. But that's about the banking space, guys. Coming back to you all.
Okay, thanks a lot, Nigel, for that. And I'm going to keep in mind that banks are very important now that it's the end of the month. But the other thing that I'm watching out for closely is the Reliance AGM that happens on Monday. All eyes will be on that. Just 3 or 4 quick things to watch out for. Now, Reliance is investing heavily in the new energy business. They've already announced an investment of $10 billion over the next 3 years in the new energy business. What are we watching out for? Any potential timelines for various projects and any clarity on new energy capex. Apart from that, the launch of 5G services could be announced at the AGM. They could announce a 5G network rollout plan across the country. Remember, Reliance Jio has recently spent 88,000 crores to acquire a total of 24.7 gigahertz spectrum. And finally, everyone, Prashant, Nimesh, Nigel, everyone's expecting that perhaps some timelines on the LGO listing, the retail listing and the O2C listing will be announced, but I feel it's unlikely at this particular meeting.
Reliance Retail, by the way, reported numbers, outstanding numbers from the company. So yeah, absolutely. I thought you were going to mention the holiday coming up, which is coming up
next week. Yeah. And by the way, there's an iPhone launch as well coming up. iPhone 14. Yeah, that's in the first week of September. In
so
case anyone's
with your salary.
With the salary. I think all 3 of you can buy me an iPhone if you all wish, right? Salary is coming up. Okay, let's take a quick break on that note. But on the other side of the break, we have Prashant Khemka of White Oak Capital who's going to join in to discuss the fundamentals of the market. Stay tuned.